I'm Dr. N. Deep Lakshmi. I'm going to talk about the financial accounting. Financial accounting means before going to the financial accounting, first of all, we want to know the accounting. Accounting means the system by which assumed responsibilities is validated. It means all the business transaction it should be enter into the proper register or notebook. Nowadays the tally is the concept of entering the transactions into the business. The accounting may be validated in two types. One is the internal responsibilities. The internal responsibility means the owner of the business they enter their transactions, their business transaction into the notebook or maybe the tally. The present tally concept is 9.2 is the tally concept, and the second thing is the external responsibilities. External responsibilities means they appoint the outsiders and they have to validate their accounts with the help of the external person, and they should be entering the transaction, or they may be verify or validating the accounts. The next thing is the financial accounting is how we should be verified means with the help of the external responsibilities, means it is very accurate to the business. The next thing is the financial statement. Financial statement, the first concept of the financial statement is balance sheet. The balance sheet is the investing and financial activities are the first order of business. It means all the investments or maybe the expenses they should be finalized with the help of the balance sheet. Basic accounting equation, the balance sheet equation is equal to assets equal to liabilities plus the owner's equity. Assets, we have two types of assets. One is the fixed assets and another one is the current assets. Fixed assets means the immovable assets is called as an fixed assets. All the buildings, the machineries and other things is called as an fixed assets. Current assets mean the the assets easily converted into cash. That is called as an current assets. The best example of current assets is cash in hand, cash at bank. The assets is equal to the liabilities. Liabilities means the bank loans, sundry creditors and other things is coming under the liabilities. Owners equities means we know we have the share capitals. So share capitals mean that is the very big concept. At present I don't enter into that. The owners cap equity means that is called as all the shares and debentures is coming under the liabilities and owners equity. Next one is the increase and decrease of each sides of sign must balance. It means, what is the meaning for that means liabilities and asset side value it want to be equal. It should not be the different values. That is called as an balance sheet nature. And the algebraic equation is equal to a equal to l plus oe. That means assets equal to liabilities plus owner's equity. So that is called as a balance sheet. The next thing is the income statement. Income is also called as the statement of operation. It is otherwise known as the statement of operation. I mean, day to day expenses, it should be enter into the whether it's going for the profit nature or not. So like that they should be entering all the day to day operations, I mean day to day expenses, they should be entered into the income statements. It is otherwise known as the revenue and gain represent the inflow of the resources. The next thing is the expenses. The income statement it includes the revenues as well as for the expenses. Revenues means all the inflows resources is called as an revenues. Expenses means all the outflows of the assets. It means, what is the simple concept in this means All the cash inflows is called as an revenues. All the outflows of cash is called as an expenses. The net difference is if suppose if the income side is higher, the expenses side is value is lower, means that balancing figure comes to the net income. If suppose the expenses side value is lesser and the income side value is higher, mean that is called as an net loss. In net income increases owner's equity and net losses decreases owner's equity. So all the concept is coming under the owner's equity. And cash flow statement. The cash flow statement is identifying the cash flow during the particular period. It may be your 6 month or 1 year. That is called as an operating activities inflows is called and outflows is called as an cash inflow statement. Investing activities inflow, financial activities inflows. So these are all called as coming under the cash inflows. A particular period, I mean, for example, 6 months or 1 year. In the particular period, so operating activities inflows, investing activities inflows, financial activities inflows, all the items is coming under the cash flow statements. Some of the above three is the net increases, decreases in cash for the period. So it means it may be the the cash inflows statement, it may be increased or decreased concept is also coming. Net increases or decreases for the period is added, subtracted to the beginning balance to given under the ending balances. In case if it is the cash inflows and cash outflows, it want to be tallied. So that is the concept of the cash flow statement. The next thing is the owner's equity statement. Owner's equity statements means it should be separate concept. And the sole proprietors, we have the sole proprietors or the partnerships. So types of entrepreneurs we have, that concept is coming here. It means first thing is the owner's sole proprietor. Sole proprietor means one individual person, they have to start the business and they have to run the business. That is called as an sole proprietorship. Next one is the partnership. Partnership means we know the partnership, the two or more members, they have to combine themselves and they have to start the business. That is called as an partnership. In that partnership we have the capital account for each owners. So that is called as an partnership. And next one is the corporation. Corporation means we know it is called as an companies. Companies means partnership means the less than 10 members is coming under the partnership. More than that means that is members is joined, mean that is called as an companies. The companies is also having the capital accounts and some other things is. And then we have the retained earnings. Retained earnings means the particular investment, it want to be returned something. For example, if I am going to get some company shares, means I want to be get the dividend from that, or something else I want to be get as a return. That is called as an retained earnings. Thank you for your thank you for your time to spend and watch this videos. Thank you.